Good evening, everyone. Firstly, at the outset, I would like to thank Union Bank management to having given us this opportunity to host the call. We have on the call Mr. Raj Kiran Rai ji, Managing Director and Chief Executive Officer, Mr. Raj Kamal Verma, Executive Director, Mr. Atul Kumar Goel, Executive Director, Mr. Gopal Singh Gusain, Executive Director, and other senior management team on the call. I would like to request CFO sir to read the disclosure statement, and thereafter we can start with a brief presentation, and lastly the Q&A session. So I would like to hand over the call to the CFO sir. Thank you.
Good evening, everyone. Before getting into the concall, I will read out the usual disclaimer statement. We would like to submit that certain statements that may be discussed during the investor interaction may be forward-looking statements based on the current expectations. These statements involve a number of risks, uncertainties, and other factors that could cause actual results to differ from the statements. Investors are therefore requested to check the information independently before making any investment or other decisions. I would now hand over to our MD and CEO, who is joined by Executive Directors and Senior Management team. Over to you, sir.
Good evening. It's a pleasure and privilege to welcome you all on second quarter financial results of Union Bank of India for the financial year 2018-19. Your analysis and feedback makes important input in shaping our business. On behalf of Union Bank and my personal behalf, please accept my gratitude for the same. Dear friends, I have structured my remarks in three sections. Firstly, I will begin with an overview of developments in operating milieu, which will set the context for business and financial to be covered in the next section. It will be followed by an update on structural initiatives being undertaken, which will lead to concluding of our remarks with the guidance for the remainder of the year. Macro overview. It's been really happening quarter with the macroeconomic positives nearly outweighed by rising concerns in financial markets. Firstly, GDP growth numbers for first quarter signaled recovery gaining hold across sectors, with the demand side high-frequency indicators showing consumption and investment both gaining pace in second quarter. On the other hand, financial markets witnessed a sharp reversal of prospects with reassessment of asset-liability mismatches, breeding liquidity concerns around NBFCs. External sector challenges in terms of crude and currency didn't help their cause either. Encouragingly, there is semblance of normalcy returning on external front, and I hope it soon start reflecting in financial flows. Coming to banking sector, banking aggregates noted smart uptick, though sectoral deployment of credit remains uneven. The resolution of stressed assets took some definitive advance, with a few big-ticket exposures leading to conclusion. Speaking of business and financials of Union Bank, I am happy to share that bank made strong gains on asset quality, closing the quarter with lower stressed assets, both in absolute terms as well as ratio terms. It is a result of lower slippages, which declined 43% sequentially to rupees 2,667 crores, while recovery and upgradation total stood at 1,615 crores. Of the recoveries, rupees 111 crore came off accounts resolved through NCLTs. Bank has written off rupees 1,868 crore during the quarter. We have sold 2 accounts to ARCs amounting to 400 crores. Accordingly, gross NPA and net NPA as ratio to advance stood at 15.7 and 8.4% respectively. Business growth was as per our guidance. Credit grew 2.8%, while deposits rose 3.4% on annual basis as of end September 2018. On average basis, however, credit growth stood at 5.9%, while deposit growth stood at 7.2%, implying steady momentum during first half of financial year 2018-19. CASA share stood at 35.3%, while RAM sector share and loan stood at 54.2%. The bank opened 16 lakh new customer accounts during the quarter, which bolstered our liability franchise. Speaking of financials, the net interest income rose 7.5% year-on-year to rupees 2,494 crores. Meanwhile, other income declined on account of mark-to-market losses in the wake of rising yields. equity market volatility too culminated in lower treasury gains. Operating expenses growth remained contained meanwhile. Operating profit stood at 1,772 crore while net profit stood at 139 crores. The provisioning coverage ratio rose to 57.7% as of end September 2018. Our capital light growth reflects in decline of risk-weighted assets during the quarter. The RWA to advances ratio stood at 87.3% as of September 30th, as against 93.6% a year ago. Capital adequacy ratio stood at 11.55, within which common equity tier 1 stood at 7.54. The bank has shareholders approval for raising 7,400 crore during this financial year. This brings me to the third section of my remarks, an update on structural transformation initiatives. You may recall that in my previous interactions, I had talked about centralization of credit underwriting to select branches to improve quality of assets as well as freeing the front branches for cross-sale and upsale. We have set a target of 80% credit processing to be centralized through select 200 centers, specializing in corporate, emerging corporate, MSMEs, retail and agriculture credit. I am happy to share that we have achieved 74% centralization of credit as of end September 2018. There are 8 specialized branches focusing on large corporates, 23 mid-corporate branches, 45 Sarals, which are SME-focused processing units, and retail-focused 73 union loan points, and agriculture-focusing 19 union Samriddhi Kendras. On sourcing of new business, a total of 63 fully functional teams of specialized sales personnel are pursuing institutional business in a focused approach. We have formed specialized setup on monitoring, integrated approach, both people-led and technology-enabled. Early results are reflecting in lower slippages, as well as sequential tapering of early warning signal and SMA portfolio. The early warning system developed in-house identify stress even 3 months before an account surfaces as SMA, thus giving us 6 months space to work for resolution. The bank is adding new capacities for collections and we will launch it soon. Some of our HR initiatives, especially the development of leadership pipeline, have come to fruition and we are finding good results on redeployment. Encouraged by response, the bank is broadening its ambit by introducing the concept of job families. Put simply, the whole workforce will be groomed in such a way that they develop functional expertise in few domains while having broad understanding of others. The benefit of it is that bank can use the trained resources for the purposes they have acquired specialization. It will revamp the paradigm of learning on the job. Friends, we are stepping into our centenary year soon and accordingly the whole bank is gearing up to make it memorable one. We have planned a series of initiatives, both customer-centric as well as internal, in synergy with our goals for the year. I'll be updating you as we go along. We see credit demand improving, benefiting of gathering momentum in the economy. Union Bank is ready with the distinct structures and process to harvest the increased flow of business with better efficiency. Let me conclude by sharing our guidance for the remaining of the financial year. We expect deposit growing at 8 to 10%, while advance growth be around 7 to 8%. NIM to be around 2.25% for the quarter ended March 2019. Cost to income ratio in the range of 46 to 48%. Provision coverage ratio to be around 60% as of end March 2019. Delinquency to be around 3.5 and credit cost to be around 2.25. To contain gross NPS below 12% and net NPS below 6% by March 2019. Thank you. Now we are open for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We would take the first question from the line of Maharu Kachania from RAFC. Please go ahead.
Yes, sir. Hi.
Hi.
So how much portfolio have you bought from NBFCs in October? HFCs, I mean.
Up to now, we have sanctioned 2,500 crores.
For portfolio buyout?
Portfolio buyout. We plan to go up to 5,000 crores.
Oh, but you already bought 2,500 or it just sanctioned?
We already bought.
Already bought. Okay, okay. And so, in SR Steel, what is your provisioning? How much would you recover going by the current rates, whatever is in the media?
Actually, on the outstanding book, it is about 60%, 65%. 65% on SR. On the outstanding book.
SR Steel.
Yeah, correct.
Okay, sir.
No, 1 minute. 50? Outstanding book is 1,780. 1,700. We have, it is 50%, madam. Sorry for that. Overall, it is 65. SR, it is 50%.
50%. And sir, how much of, in general, in the second half, what is the amount of recoveries you are expecting from NCLT? NCLT, actually, then it can be close to 3,500 to 4,000 crores for our bank. Okay. And what will be the write back?
Write back, actually, I think we expect only in SR. Other cases, I don't see. Uttam Galwa is one case, actually, that way where we have received the full recovery in October, not factored in the second quarter results. So, put together, write back can be close to around 1,000 to 1,200 crores, write back on the provision side.
How much?
1,000 to 1,200 crores.
1,200, okay, 1,000. For answer, anything recovered in 2Q?
No.
Nothing, no?
No, nothing.
And so my last question is on the power resolutions. So I know there's a court hearing in the Supreme Court. But after the Supreme Court thing, there's not much talk about resolutions going ahead, right? So what's the scene on power resolutions now? Those 11 cases of which 7 were, 7 power assets were going to see new buyers.
Yeah, actually, there were 2-3 cases where there were buyers, where I think one case our bank has given the approval also. But then all the lenders, I think it is taking some time, actually, approval. So, we are not seeing the money, even though we have approved.
Oh, but not a single case has been resolved, right, sir?
No, not as of now.
Okay, sir. Thank you so much. Thanks.
Thank you. Before we take the next question, I would like to remind all participants, if you wish to ask a question, you may press star then 1 on your touchtone telephone. We would take the next question from the line of Jay Motra from BNK Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity.
Yes.
Sir, firstly on, if you can share the movement of SMA2. So last quarter, we had an SMA2, particularly in corporate, was somewhere around 1,500 crores. And this quarter we have seen corporate slippages of around 1,200 crores. So just wanted to understand, this 1,200 crores is a subset of that 1,500 crores, or, how should we read that?
Partially, yes, actually. But then this has moved up slightly. But then when we analyze, actually even like I was also surprised when the numbers went up. It is like the Punjab FCI exposure also is coming into this. It is around 900 crores. So these numbers are fluctuating a bit. But then right now the corporate SMA2 is around 2,500. Around 2,500. It has moved up slightly. But then we don't see any stress in these accounts. So slippages also, it came partially from SMA2, partially came from outside also. So, not fully from that. But then, this is not any indicative of the fresh slippages. That's what, at this point of time, it has become very small. Actually, most of these SMA2s are technical.
Sure. And what is the total SMA2 number, sir? Last quarter it was around 10,100 crores.
Yeah, it is around the same number, even now, same number. But the corporate has moved up a bit.
Okay, sure. And secondly, sir, we have given more disclosure on the rating profile. Just wanted to understand, if this, the base of this rating profile, is it gross loan or this is net loan?
Gross.
As in,
it is gross.
That is gross, right?
Gross.
That is gross.
Yeah.
Okay. And sir, if you can share that number in terms of absolute number of that base, that will help, because otherwise it would be like, because if it is a gross number, then, it will not be comparable with the net advances or, as a percentage of residual stress.
Right.
So, I can give you the number also. We have given the percentage in the presentation. So we have making two slides, one for the total NBFC and another for the HFC. So if you will
not NBFC.
No, sir, the total overall one.
Rating.
That rating profile is like a gross number. You have
So that is the breakup of 3,18,000 of gross advances. Of that, of the rated pool corporate advances, that is the distribution.
What is the rated pool is asking?
Yeah. Total out of 318.
If you take out unrated, you'll get the number.
I will give you.
आपके पास होगा P18 में what is the rated pool? You have the number? Anyway, we will give you that information.
Sure.
Yeah,
sure,
so
sir.
gross number is 150,000.
Okay.
That is a distribution of 150,000 of corporate loan.
Okay.
Okay, this is from the corporate book. Yeah.
Yes, sir. Sure. And just last question on this restructuring book, sir, because the increase is mainly due to Kerala floods, is it?
Yeah, that is on account of it. Otherwise, there is no case of the restructuring, because Kerala this was the reason there is an increase in the restructuring book.
Sure, sir. Thank you so much. I will come back in the queue. Thank you.
Thank you. We take the next question from the line of Adarsh from Nomura. Please go ahead.
Yes, sir. Sir, a question on your coverage and, CET1 and how you plan to grow, right, the 7-8% loan growth number. So your coverage in the last 2 quarters, you've reported profit, but it's still flat at about, reported numbers at about 50-odd%. And, which means that it will need to go up. And when that happens, it eats into the capital ratios. And you're still, guiding to a 7-8% loan growth. So if you can explain where, because most banks talk about taking their coverage without written off accounts to 60-65% at least, if not more. So when that happens at our NPA base, certainly we could have some quarters of loss that we may end up reporting. And in that context, the CET1 still is 7.5%. So why even grow at 7-8%?
Okay. On the capital side, we are expecting some capitalization mostly this quarter or maybe the last quarter. So we are in discussion with the government, because you are right that we need some growth capital now. Plus then there is a Basel III requirement coming up of another 0.625. We need to be CET1 particularly at 8%. So we have a gap there, and we are very hopeful that we may get some idea of kind of capital we are getting. So with that assumption, we are planning 7 to 8% growth. And maybe this quarter itself we will get an idea on how much capital we are getting. That is one part. And on the NPA provisioning side, yes, we are slightly behind curve compared to peers. But then if you look at the tangible PCR, we are already at 50%. And this is close to most of the peer. And gradually it will move up. Actually, if you see, gradually we are increasing this coverage. And we may have some more comfort when these NCLT resolutions are happening. Some unlocking of provisions will further help us to increase this provision. We'll gradually build up this provision. Yes, there is a gap, but then I don't think we may have to incur losses to cover the provision. That may not be the requirement, because the resolutions are taking its own time. So next 3-4 quarters, I think we should be able to match the all other peer banks on the tangible PCR side.
What kind of capital are you expecting?
Actually, our requirement, we have disclosed that we can raise up to 7,400 crores of capital. Out of that, 6,800 can be the CET1 capital. This is what we have taken the approval and put. It actually, when we plan, we keep a cushion of 1% over the regulatory minimum. but then we don't expect that kind of capital will come. But then we are expecting a decent capitalization for about 10% growth and for meeting that 8% minimum. So I can't disclose the numbers as of now, but I can safely say that we will get capital to meet that 8% requirement and for a growth of about 10%.
So the only problem with that is you're keeping diluting at a very bad valuation, right? So the issue is that your market cap today is 8,000 crores and gets quite tough, right? Even if you get 3,000-4,000 crores of capital, it will be a 50% dilution at current prices. So why not just cut growth, take less capital, right? That's the best option that you may have.
That is an option. We will see at this point of time, like that is a trend. But then, as we go along, looking at once the government decides the capitalization, and if the share price is at the same level, then we can look at it. But then we expect that prices may be at more reasonable levels when the capitalization comes.
Understood. No, thanks a lot.
Sir, does that answer your question?
Yeah, I'm good. Thanks a lot.
Thank you. Before we take the next question, I would like to remind participants, if you wish to ask a question, you may press star then 1. We will take the next question from the line of Sneha Kantra from Shubham Ventures. Please go ahead.
Sir, first question is, what is the ILFS exposure and how much provision we have done?
Madam, actually, we are having the total exposure of around 1,093 crore. 1093. And as on date, all the accounts are standard because we have the major exposure, one of the SPV of the ILFS group, no direct exposure, much exposure in the company. So 817 is the exposure on the power SPV of the ILFS. That is standard, paying timely, no provision we have made. All the accounts are standard.
Okay. Second question is, during the quarter there was a huge write-off considering the past trend. Anything to look into, or how you see the trend of the write-off going forward?
It is a very normal thing. Actually, it is a balancing thing because we had 100% provision accounts. So we just to, as a cleaning measure, keep the book clean. There is no other thing. It is a very normal thing for us, just to clean the book.
Okay. And what are the slippages guidance for the next 2 quarters?
I think, overall we are still maintaining a guidance of 3.5 on the slippage. I think we should be able to manage that.
Okay. When you're mentioning your margins at 2.5, would you like to say the rationale that margins would be, because current quarter our margins are being under pressure?
2.25, not 2.5, madam. 2.25.
Yeah, 2.25.
Yeah. If you look at the first half year, we are already at 2.22. And if you look at the system, now today the pricing power is back with the banks. So we are consistently doing it from the last quarter onwards. It is already showing up. So I think 2.25 should not be issue when the full year comes. Because most of these loans are priced as per the risk pricing now, close to risk pricing.
Okay. And my last question is on the fee income side. Have we taken some of the initiative to grow more amount of the fee income as this quarter has been slightly dipped?
Yeah, we have taken initiatives actually, but then fee income mostly come from the non-fund based limits. So if you have seen actually these LCs, VGs business had slowed down a bit because internationally also or domestically also. I think now it will start taking off. I think we have seen that plateauing. So I think now we'll see improvement.
Okay. And just last question on the NBFC. Are we continuously lending on the NBFC or is there any sectoral cap we have kept for our bank also?
There are sectoral caps, but we have a space for lending to NBFC. But at this point of time, we have slowed down on the direct credit to NBFC because we need to assess 2 things. The asset liability mismatches which may be there in their books and plus kind of the riskier assets they hold in their books. So that assessment is going on before we take the further credit call. But we are going ahead with the portfolio purchases because this is done after a proper scrutiny. These are mostly mortgage backed So this time we have planned that we will buy up to 5,000 crores of portfolio in this quarter.
Okay. Got it. Yeah. Thank you.
Thank you. Before we would take the next question, a reminder to the participants again. If you wish to ask a question, you may press star then 1. Next question is from the line of M.A. Mahesh from Kotak Securities. Please go ahead.
Good afternoon, sir. Just a reconfirmation of the previous question. You said the ILFS exposure that you have is approximately about 1,093 crores, of which 817 crores is your exposure to the power subsidiary, is it?
Yeah.
And this asset currently is repaying on time. Yes. There is absolutely no issues with the plant.
No issues.
Okay. And of the balance, which is roughly about 200 odd crores, what is the kind of exposure out there? And
this small one road project, one to the parent company. It is all 75 crores, 80 crores, that kind of exposures, both fund-based and non-fund-based.
Would you have any number on what would be your holdco exposures that you're sitting with?
Holdco exposure is 75. And their financial services is another 75.
At the holdcos in both these places. Total put together is about 150 crores, which is actually.
That's all.
Okay. And second question, of this 1,220 crores of slippages that you reported on the corporate side this quarter, what are the major sectors that you've reported out there?
Major sector is the construction, EPC, and real estate.
Okay. Any numbers around this?
No big number. If you ask me, I'm not giving the name, but the highest exposure was the 150 crore.
Yeah. Okay. And your total exposure that you have towards the real estate side?
Total exposure to the real estate?
Just a minute.
Yeah, we'll give that number.
So, okay, the last question is, sir, we have started to hear a fair amount of action in the distressed asset market, where people have started to... distressed assets. Just wanted to understand, when we speak to them, they seem to be indicating that banks are a lot more open in selling assets today. Just wanted to understand what has been on a cash basis, what has been your experience so far, and how do you see it moving if the NCLT cases resolution takes much longer than what was expected?
Yeah, actually, this interest comes in particular assets. So it is not it is not a wide-ranging offer. It is coming on particular account, particular this thing. We have also sold one asset in the last quarter, where it is a full cash down actually. So that kind of offers we are exploring, and yes, you are actually few foreign banks are also behind these buyouts now. So this is happening actually. It's happening, and when it comes, we assess, and one account we settle in this quarter. Q2.
So, just to clarify here, there was the marquee asset which is sitting on the steel side. There has been a fair amount of transactions which has happened on the distressed side. Any reason why are you not participating, given the fact that most of these transactions allows the bank to participate on the upside as well? Why are you still holding back, given the fact that you have an option of recovering that money back at the current value and possibility of getting an upside as well? Why are you still hesitant to sell these assets today?
We have not seen this kind of offer what you are talking about, because we are also exploring this. Only one bank has taken a decision to sell, and but the offer which came from the company is substantially higher than what offer they were looking at, and that transaction is not completed as of today.
Okay.
So we are also watching this. But then, there is no uptick available here.
Okay, and barring the steel side, on some of the other places, you're saying that the activity is still not meaningful.
It is there. It is there. Actually, activity is there. We have done one transaction. There are 2-3 discussions taking place with them, but not the big one like steel. But then these are on specific sectors where these actions are happening. One has happened on the hospital side, actually, the healthcare side. One has happened on the telecom network side. We have seen this transaction. Out of that one transaction, we have received the cash in Q2. and few transactions we may get in Q3. These are happening.
Sorry, and one last question. If you look at your portfolio of assets which is sitting on the corporate/SME side, how much do you think can you sell in the next couple of quarters?
Sell to the ARCs?
Sell to ARCs or these banks, the international banks which are a lot more active these days.
We have actually answered that. We are actually, we are very choosy for two reasons. One is basically, upside you are talking about. That, we are not getting upside because the upfront discount that we offer to that this transaction entails is huge. Okay, which we would not like to offer such kind of discounts in such a very, very, assets where we see a lot of recovery coming in and where we are able to reverse our portfolio. That is one thing. That is the reason why, we are a little conservative in terms of how we negotiate with the buyers. One. Two, with respect to this, the second question that you have put, as of this quarter, December quarter, we have lined up around 650 crores of the assets that we propose to sell. And going forward, depending upon the discussions we may have with the ARCs, we may decide the number. And most of the discussions we have, we look at a very, very win-win transaction structure for us, and where we are getting upfront a good amount of money than going for SR and looking for uptick and all, where we give huge discounts to ARCs.
Okay.
We are doing mostly cash deals actually.
Fair points. Done. Thanks a lot.
You are asking for the real estate exposure now. It is 6,701 total exposure to real estate.
Okay, and how comfortable are you on this exposure, sir, as we speak today?
Yeah. I think we have not seen much stress as on date. But I told you only one account of
it may be LRD. It is mostly lease rental.
And how much would be the LRD of the 67 billion?
Maybe around 40%, maybe around 40%.
Yeah.
Okay. Okay, sir. Done. Thanks a lot.
Thank you. Next question is from the line of Parth Gutka from Motilal Oswal Financial Services. Mr. Parth, you may please go ahead with your question.
Sir. Thanks a lot for the opportunity. Quarter on quarter, our agricultural NPAs are going up, and now it's 7.62% of the total agri book. So can we just throw some light on us, and from which stage are we seeing? What type of loans are this? Are this KCC or tractor loans?
Agricultural NPA, which it is Maharashtra. It is coming from three major states, Maharashtra, UP and Karnataka. Now I think it has started coming from Rajasthan also. It is mostly the election and election-related states where these debt waiver issues are coming up. So mostly the NPAs are coming from those places. And this is coming from mostly the small loans, the crop loans and that kind of thing.
Okay, sir. Thanks a lot, sir.
Thank you. We would take the next question from the line of Kashyap Zaveri from MK Global. Please go ahead.
Thank you very much, sir, for the opportunity. Just wanted to check, did we have any interest income write back during the quarter on any recoveries or upgradations?
No.
So this number is a normalized NII number for the quarter?
We had interest reversals actually. Because agriculture NPA, the reversals are generally slightly on the higher side. We had nearly 240 crores of interest reversal in this quarter.
Okay. Thank you very much, sir. That's the only question I have.
Thank you. Before we take the next question, a reminder to the participants again, if you wish to ask a question, you may press star then 1. Next question is from the line of Amit Singh from BNK Securities. Please go ahead.
Thank you, sir. Thanks for this opportunity. Sir, first question is, what was our exposure to Uttam Galva, where we have recovered 100%?
I think 444.
400? It was 444.
Okay. And sir, secondly, where you said we have done 25 billion rupees of portfolio buyout. So, sir, what is the spread that we have made on this portfolio buyout?
Should we disclose this? Yeah. But it is a good spread. It is a good spread. I think specifically it may not be fair for me to quote. But we have built a good spread.
Whatever we were giving to the NBFC, it is better than that.
Okay, sir. And sir, secondly, sir, what is our security receipt portfolio now?
970 crore.
970 crore. And sir, what is our SMA 0 and 1 numbers?
SMA 0 you want?
SMA 0, 1,
SMA 0, I think, SMA 2 we have already disclosed.
Offline you can talk to Mr. Nitish.
Yeah. It is 10,717, SMA 2, yeah, that is all. Yeah.
Okay, sir. Thank you, sir.
Thank you. This is a reminder to all the participants in the conference. If you wish to ask a question, you may press star then 1 on your touchtone telephone.
Hello.
Yeah. Hello. Yeah.
Yes, sir. Rakesh, just one question. This quarter, sir, upgradation and recovery numbers were quite high.
Yeah.
So if we compare with the Q1 numbers where we had, some Bhushan and Electrosteel, so this kind of cases were not there this time. So what is the sustainability of these two numbers going ahead?
This quarter, I can assure you the numbers will be similar or better. Because already we have seen recovery of Uttam Galwa and others. But then otherwise also overall, it is a continuous effort on the recovery side. See, I'll tell you, on the retail credit, if you look at the pool of NPA, despite the slippages, my gross NPA number on the retail is lower than what I had in 30th June. So that gives you indication kind of recovery efforts going on. So I think this number should be sustainable. Without any big settlement should be a bonus on these numbers. 1,000 to 1,500 crores of recovery upgradation should be a new normal for us.
Okay. And which segment these are coming from basically? Like these are agri, these are SME?
It is coming from all the sections. It is coming from retail, MSME, because there is a lot of focused attention on recovery. The teams are created, a lot of data. We have developed a recovery app actually which is on the mobile. So there is a better tracking, monitoring, and it has taken some time to stabilize. But now most of these mortgage-based securities we are able to take position. There is good support from the government, particularly with the specific instruction to district magistrates to cooperate with the banks for taking position of the properties. All these things have helped in getting this recovery.
Okay. Thanks, sir. Many thanks. Thanks.
Thank you. We would take the next question from the line of Akash Nignani from Macquarie. Please go ahead.
Yeah, hi, sir. Just one question. Can you please repeat the deposit and credit guidance for the year?
Credit guidance is for 7 to 8%, and
okay.
Deposit guidance we have given 8 to 10%.
Okay. Thank you. That's it from my side.
Yeah.
Thank you. We would take the next question from the line of Pritesh Bam from Pradas Leeradhar. Please go ahead.
Hi, sir. Sir, just wanted to check the recovery which has come. Where does it fall in our P&L? Is it in the recovery from NPAs in other income or in the interest income?
No, these are pure NPA recoveries which went to reduce NPA. Wherever the recovery has fallen into like the return of cases, this is given separately.
So both are not right?
No, that is separately given. It is not included in this number. This recovery upgradation is a pure balancing number for NPA.
Absolutely, sir. What I'm asking is when the money comes in, how do you show it in the P&L? Is it recovery from NPAs or you book interest also in the...
Here may be some cases, because if we are getting the recovery, some part maybe go to the interest also. If we have recovered from the return of account also, that will go directly to the other income. We have also booked around 100 crore rupees in this particular quarter, recovery from the write-off account.
It is in other income.
Yeah, other income.
Not the interest income.
So
to answer your question specifically, the interest income booked on NPA recoveries is not very substantial this quarter.
Okay, so that means as last quarter we had seen 274 crores.
Yeah, so that kind of things are not there this quarter.
Okay. So these are the two accounts which have been recovered this quarter, right? Uttam Galwa and one more account?
No, that is in the Q3.
No, Q3. Okay. So it will come in Q3.
Q3. That is not factored in.
Okay.
And you will see some interest recoveries. You are right.
Okay.
Normally, if you see the figure, upgradation is 407. Upgradation, when we are getting the recovery, a part of the definitely will be booked to the interest.
But not substantial.
Okay, just to ask, these two or three accounts are written off in the books or still, a part of
which one?
Like out, the Uttam Galva and others?
No, they are not written off. They had a normal provisioning. So that provisioning right back we'll get. Some amount of interest we'll book in Q3.
Okay, thank you, sir. Thank you. Thanks.
Thank you. We will take the next question from the line of Amit Singh from B&K Securities. Please go ahead.
Thank you, sir. Sir, how much of our book is linked to MCLR and how much is fixed?
Around MCLR 65% the last quarter.
70%.
MCLR is almost 70% now.
70% and okay. And sir, what is our SMA 1 book, if you can share?
No, SMA 0 and SMA 1 we are not disclosed till now. Because there is actually a lot of technical things are coming because of non-renewal also. So which gets renewed at a bit late. That's why these numbers are not very steady. So we are not disclosing. Once we stabilize, we start declaring. Only SMA 2 we are declaring and it is around 10,000 crores.
Okay, sir. Thank you, sir.
Thank you. Well, ladies and gentlemen, that seems to be the last question for today. I would now like to hand the conference over to the management for the closing comments.
Thank you very much. You are every time interaction with you is always it's a good learning experience for us. So thank you so much for your active participation. We look forward that the performance what we have shown in this quarter is a very, very normal quarter. So I think this kind of steady performance we foresee for the next few quarters. So with that, I think we will cover up on the provision side also. So thank you so much.